From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Wednesday. I'm Juliette Sarli. On a down day for the market, a day when we saw a spike in the Aussie dollar and a day full, of course, of earnings. Let's have a look at where we're tracking on the market. I think we're down by about 0.1% on the ASX 200 as we head into match-off. Yeah, 0.1% or 11 points. 8,060. Look, not quite the very solid week that was anticipated when we came in on Monday, but nevertheless, of course, we are reacting to a lot of earnings results and looking ahead to what's happening on Wall Street too. But the other real factor here today was the commodity sell-off weighing on our overall market. So you've got the likes of BHP down by almost 2%, Rio off by 1.5%, Fortescue, which reported today, down 1% as well. And the likes of Mineral Resources and Pilbara hit quite hard as well, along with the energy sector, as we saw crude take a battering of around 2%. But I mentioned the Aussie dollar actually had a very good run. Now, inflation, the July CPI print, 3.5% on the year to July, 3.8% underlying, obviously not going to do anything to change the needle in terms of what the RBA is thinking. And a lot of analysts as well saying, look, perhaps those electricity energy rebates are going to show up more in the August numbers. But you did see the Aussie spike to 68 cents after that release. And I actually was speaking to Angus Geddes from Fat Profits, who reckons there is a 70 handle in sight for the Aussie. And of course, the other one here, we've been talking about it ad nauseum, and that is Nvidia, and it finally reports tonight. I'm going to be talking to Mark Gardner from MPC Markets about that in a little while. Let's just have a quick look though at the sectors of the day, particularly as we saw that weakness coming through in those mining players. As I mentioned, Fortescue at $18.40 after reporting its numbers today. Energy stocks also under pressure. We had a great chat with Woodside's CEO, Meg O'Neill. She came into the Ausbiz studios this morning. You can find that online. Now remember, Woodside did well yesterday on the back of its dividend, but a bit of a sell-off today after that oil price fluctuation, and Santos down 1%. Having a quick look at some of the tech players. A rebound in Zip after it got flogged yesterday, up 14.5%, $2.37. NextDC reported today, shares down by 4%. And just getting into some of the company news that we were following, supermarket giant Woolies shares rallying. This is because it rewarded shareholders with a special dividend of 40 cents, higher than what the market was looking for. Now, Flight Centre, this is a really interesting one. Earnings at a fresh record, surpassing pre-COVID levels. And they talked a lot about the boomers. They are still, as we know, travelling and spending money on enjoying their retirement, shall we say. Fortescue down despite rallying earlier in the session when it did post that 18% jump in net profit to $5.7 billion US dollars. APA Group lower. It posted a near 10% increase, though, in underlying earnings for the full year. And Nine Entertainment, Andrew spoke to Mike Sneesby. They did see a weak TV market, stripping about 119 million from their TV division. Andrew and Mike Sneesby also talking about the impact of the Paris Olympics on Nine. But let's get into our guest now, and welcome to the COB, Mark Gardner from MPC Markets. What took your eye today in reporting season?
I think overall earnings season, it's just been a series of oxymorons. You've got the likes of Fortescue today, where investors and analysts have left basically no stone unturned in trying to pick holes in a company that's got 80% margins, a 6% 6 PE, and a 10.4% fully franked dividend. Versus 2 weeks ago, you got JB Hi-Fi rallying 15% on a 20 PE, half the dividend. 3 or 4 times the PE. It's it really is. I think investors have really picked their favourites this earnings season, and kind of almost made up their mind beforehand. Because I mean, Fortescue at these levels, and BHP's report yesterday. BHP have obviously got very good long-term plans. Yeah, they're shifting to copper, and there's much talk about China weakness, etc. But Evergrande fell over 2.5 years ago. I mean, there is really only probably upside realistically in this, and the likes of Fortescue, for instance. I mean, they're producing at $18 and we're selling at $100. Yeah. JB Hi-Fi's margins are 23%. Yeah. So I think there'll be, and both sectors are incredibly cyclical. So then they're not JB Hi-Fi is not going to be immune to an economic downturn, whereas the commodity sector's pricing in a heavy economic downturn. I think there'll be a very large rebalance over the next couple of months, because at this point, the consumer discretionary and probably the finance sector, the big four, are priced at a point where zero can go wrong, and we can't have an economic downturn. Whereas the commodity sector, realistically, everything's priced in to the downside. And
you've got to think with Fortescue around 18 when it was 28 not that long ago, and they're still paying pretty good dividend.
10.4% fully franked.
Yeah.
I mean, and 18% growth in profits. And they've also, there was a little bit of bad news, but it certainly just goes to show that, you know, maybe sentiment over reason in this earnings season.
Well, that's a good point, because companies, I should say, get punished on the day. You look at the likes of Zip, which got punished yesterday. Lovisa got punished yesterday. That's an interesting point on the retail front too, possibly because it's been a market darling, it was sold off. How are you sort of seeing the consumer reports when you look at that discretionary spend?
Lovisa, I mean, I've never seen an analyst report be so focused on a CEO's LinkedIn post. They're disappointed by a whole 6 stores out of 908 stores. That was probably just the market pricing in too much upside. I think, you know, it's a great opportunity probably to buy the dip on a long-term basis for sure. I wouldn't necessarily be buying in the consumer discretionary sector at the moment, where it's sitting at record highs. Look, we're looking at a rate cut environment coming up. Consumer discretionary and financials both, on average, for the last 4 rate cut cycles, will fall around 20%, no matter what, no matter how good the business is, basically. So, you know, I would think that, you know, Lovisa's just come back to reason overall. I think even the likes of Goodman Group was up 55% for the half year. They've got $14 billion worth of projects, 82 projects. There's a lot can go wrong in 82 projects, and it you know, they've started to sort of see a reason at the top. Pro Medica's price action at the top, even Technology One. They're starting to run out of steam a little bit. I think Nvidia, obviously tonight, is a massive.
Well, let's talk about that. I mean, we've been talking about this for so long. It's finally here. What are we going to be talking about tomorrow once it's out?
The US analysts have a really good knack of always pricing just below where companies report. But options, there was an assessment on the options market in the last sort of 24 hours of saying investors are pricing in anywhere up to 9.8% volatility on the day in the daily options. So whichever way it goes, it's going to be pretty big. But I think the risk is more for the broader chip sector. I mean, Nvidia, I still think is the highest quality in the sector. If Nvidia falls away, I think it probably damages its peers far more than it damages Nvidia itself, because I think it's got that, it's so far ahead of everyone else. But look, I'm not brave enough to call at this stage, because it's...
Well, let's talk about the overall market, because I was talking to your colleague Jonathan on Monday morning, and we were saying after, of course, the sort of rally that you'd seen coming through with Fed Powell finally flagging these cuts coming in September, that it was going to be a really good week and records were going to be broken, and then here we are, we're sort of ho-hum.
In our investment committee, I'm probably more on the bearish end, and he's more on the bullish end. But even I've been surprised at the lack of momentum this week. I would have thought this market would have really pushed through. It's kind of more pushed through in the precious metals. I think copper's had a fairly decent week. Iron ore's actually up quite decently this week. But yeah, I was very surprised at the lethargic reaction. I think everyone is very much looking at Nvidia tonight.
I think everyone is lethargic.
It is literally Atlas holding up the entire market at the moment. And if they report well, we could see another 3 months of at least sideways or buoyancy. If they report even in line, I think it's probably curtains for a lot of the fringe AI players, because what we've seen out of the US earnings season was that there's no revenue. So there's a lot of spending, which should benefit Nvidia. But for the actual customer end, there's no revenue coming through as yet. So it'll be interesting to see whether that's quickly gone into a reduction in spending on the infrastructure, or whether they're still hopeful and still buoyant about that. So Well, we will know it probably about 8 o'clock in the morning, I suppose.
We will. Exciting night ahead. All right, Mark, always a pleasure. Thank you. Mark Gardner from MPC Markets. Now, I was talking before about the fact that we were focusing on Nine Entertainment as well, and that was the stock of the day with our boss Kylie hosting the call. She was joined by Michael Wayne from Medallion Financial and Luke Winchester from Merewether Capital.
When you think that they've cut to the bone in these media companies, management are forced to go back to the table again and try and find some more savings. But it's a very, very challenging environment, particularly for the broadcasting arm. And we saw a similar sort of result from Seven West Media as well. It's just a very tough environment. Advertising dollars are few and far between. There's a lot of competition for that advertising spend as well these days. So these businesses continue to show signs of structural decline.
It trades very cheaply, sub 10 times earnings. Still a big chunk of debt there, and that's a bit of a worry for me. Management, to their credit, the main reason why that debt increased was a share buyback and the dividend payment. So they're quite comfortable with the debt levels, to be fair. And you back them, you have to back them, I suppose, in a cyclical type business to be able to manage that balance sheet through the cycle. But look, it was as I sort of expected to see. The structural challenges are there. There are some green shoots from the digital. It looks like they're driving synergies across newspaper, domain, and some of their other things as well.
All right, a lethargic day, as Mark Gardner from MPC Markets called it today. But let's have a look at the leaders this Wednesday, and Zip rebounding after yesterday's sell-off, 14.5% higher. Perseus Mining also looking good, along with ResMed in the healthcare sector. Ramelius, the gold player, and Linus, the rare earths player, up 3%. To the downside, Tabcorp after its numbers. Johns Lyng, which was the worst performer yesterday after its numbers. We did speak to the CEO. You can catch up with that online. We've actually now got a reporting season rail for the CEOs called CEO Spotlight, so you can catch all our great interviews with ASX listed CEO and CFOs. Nanosonics down 3.6 after its result today. Paladin Energy and Core Lithium laggards as well. When we look at the small end of town today, having a look at the winners, Adore Beauty, that's an interesting one after its numbers. Grady and I had a good chat about that on the COB yesterday. Up 15.4%, Biome, E&P Financial, Cero Resources and Ioneer. To the downside today, we saw weakness in Energy Resources, Frontier Energy, so that's the energy theme, Serco, Articore, and Northern Minerals. All right, well, of course, we know tonight is NVIDIA, and also we've got the US crude oil inventories and the FOMC member Raphael Bostic speaking, but it's really going to be all about NVIDIA, and tomorrow we'll be reacting to that. We also have new CapEx for the June quarter being released, and a number of companies reporting, including Wesfarmers, Qantas, Ramsay Healthcare, South 32, Southern Cross Media as well. So getting to the pointy end, shall we say, of earnings season, but still quite a lot for us to get through. We're down 0.2% there on the CBO 200 as we round out the day's trade. And look, I think the ASX 200 has just flipped into the green. So they heard us saying that it was lethargic and some buyers moved in. It looks like we're up, not even 1 point, 0.2 of a point, but still we'll take a win when we can get it. 8,071, I think you would call that very flat. Zip, though, was the best performer on the market, as we mentioned. So we will be back from 9:45 a.m. Eastern. Another busy earnings day, and of course the wrap up from NVIDIA tonight. We'll see you then.